So like July 1st
Right,
to December 31st would round to 6 months instead of
correct.
waiting for January 1st.
Right. So I'm just
Okay,
starting
cool.
the recording. It is March 18th. No, it isn't. It's March 19th. And I know it's bright, but I have to have my door open because it's going to rain tomorrow. Um, so I want to enjoy every last minute. And I just put up the practice exam, and somebody has something in the chat. Net PP. Diana, do you not have sound?
Oh, sorry. Yeah.
Okay.
I was just wondering on question 3, I was trying to calculate the net PPE, but I kept getting like a totally different answer. And I was wondering, how do I calculate that on the balance sheet?
Okay, let me make a list of things we want to go over. So we'll just do Justin can't be here and he wants to go over the I think it's question 5. It's bank reconciliation. So and so this is it, man. This is 3/19/24 final exam review. And
I had a question too about number 4 on the practice test,
okay, we'll go over
just about a
that.
specific part of it.
Yeah, I'm just gonna log this here. And I think it's number 5, bank recon. And number 2, what's the topic, Elijah?
It was number 4. I just don't understand the one about the $1,500 deposit from the customer.
Gotcha. Oh, I gotcha. So adjustments. Okay.
Yeah.
And number 5 is Fagan, right? Yeah, that's the one. Okay. Bank recon adjustments. Oh, that's a good start. Okay. So, and then Diana, going back to you, how do you calculate net property, plant, and equipment on the balance sheet? So let's start with that one. And I'm also going to bring up, let me make sure I have it. One of your classmates wanted to go over the Fagan. Oh, okay. So we did that yesterday during the office hour. So I have that one ready. Okay. All right. So how do you calculate net property, plant, and equipment on the balance sheet? When it comes to the balance sheet, I go back to chapter 2 and find our class. And I really love this. Can you see your course website? What do you see when you look at your screen?
On Zoom?
Yeah.
Yeah, we can see what you're doing.
Okay. Thanks, Cameron. You guys all registered for next quarter, I hope. So classes are filling up. Okay, so chapter 2, I just love this balance sheet. I think it's not perfect, but it's a good one. And if you go to chapter 2, you go click on chapter 2, click on and then click on balance sheet here, and then make that go away so you have a bigger screen. But here you can see typically we list land first, property, plant, and equipment. So land, building, and then equipment, and then less accumulated depreciation. Now, sometimes you'll get 2 accumulated depreciation accounts, one for equipment and one for building. So I'm not real picky on it for my exams, but typically if you had a building account here and accumulated depreciation building, you'd list it right under, you'd list the 2 of them together. Okay. So you have land, which does not depreciate, so it's just listed as land. And then equipment less accumulated depreciation, and that's net equipment. And then the total over here. Now, if you're just presenting the data, so this is an indented format, you can see it here. If you were presenting the data in one column, you just list your subtotals along the way. So does that help, Diana, or no?
Yeah, I see that on the the practice exam. So there's land, there's buildings, equipment, and then accumulated depreciation on the equipment. So we would take equipment minus the accumulated depreciation
Yeah,
and then add that to the land and buildings.
but let me, which question is it? It's on the last, no, let's see.
Question 3.
All right, let's take a look.
I also got a bit mixed up with that because I think it's general accumulated depreciation.
Yeah,
whereas,
so-
like you said, most of the time we've had it specific to
Yeah,
one of
and
the
I think with
categories.
Wiley, you've had it super specific, right? It's always been building or it's been equipment. So let's just bring it up. So we're all talking about the same thing. All right. Can you see the solution here?
Yeah, we can see it.
All right. All right. So there's the income statement. There's a statement of retained earnings, and here's the balance sheet. And are you asking, do you subtract this or add this, Diana?
Yeah.
You always subtract accumulated depreciation because it's a contra asset. So land, building, and equipment have debit balances, and accumulated depreciation has a credit balance. So when you combine them, you have to subtract. And it looks like all of the accumulated depreciation is booked to one account. And typically it's more with each account, but this just makes it a little bit simpler.
Okay, I see. Thank you.
So if you saw them separately, if you had two accumulated depreciation accounts, you go building, accumulated depreciation, building, equipment, accumulated depreciation, equipment.
Okay, that makes sense.
All right. Okay, let's go to the adjustments one and it's another class. Let me just send him an email. I love this problem.
I just had a specific question about the book tree entry.
Yeah, yeah.
It says they got the deposit and they recorded it already. So what is the purpose of the adjusting entry?
So let's review adjustments really quick. We have 7 adjustments, okay? I mean, there's more, but they can all kind of stem from those 7 that we learned in class. We had 4 prepaids and we have 3 accruals. So you're always going to have 1 income statement account and 1 balance sheet account, and you're never going to have cash in an adjusting journal entry. Okay. So you're good with most of these. So, and you come down this one.
Yes.
So let's back up. Booktree had, when are we making these entries? So we're making them, the company's accountant is preparing the annual financial statements at December 31st. And has asked you to prepare the adjusting entries. So watch the dates here. So they're doing the entries in December. And the question is, for the 4 prepaid types of adjustments, you would have had an earlier original entry. And now you're having one of those 4 adjusting journal entries, okay? So in this case, this was a prepaid. The company Booktree prepaid up for their lease for $12,000 for September. No adjusting entries have been made since October 1st. So now it's December 31st and 3 months have gone by. October 1st to October 31st, November 1st to November 30, and December 1st to December 31st. So you have to figure out the monthly rent and multiply it by the 3 months, rent expense, prepaid rent, okay? So we'll go down here to the one you're asking about. Booktree received and recorded a $1,500 deposit from a customer in November, okay? The books, so this is a bookstore. So the customer said, I want that Harry Potter book. And we said, I want 20 Harry Potter books. And we said, we don't have them yet. And in order to order them, you have to prepay them. So the customer prepays for them. Elijah, this is not part of the problem, but can you tell me how the company booked that prepayment?
Yeah, I mean, they would have debited cash and then credited like unearned revenue or revenue.
Unearned revenue, perfect.
Okay.
You can't, they haven't provided the goods yet, so they can't call it a sale, okay? So now the customer prepaid $1,500 for all those books. The books came in December and were delivered to the customer, okay? So the question is, what's the adjusting journal entry? Okay. So now we would say we had debit, cash, credit, unearned revenue. Unearned revenue is a liability account. And therefore the company Booktree owes the customer those books because they've been paid, but they can't call it a sale because they haven't delivered the books. Now in December, they have delivered the books. So it would be debit,
Okay.
debit, unearned revenue, and credit sales.
That makes, okay, I understand now. I think part of what confused me was it says that the books were delivered. I don't think I realized that was the product. Is there a bookstore? I was still thinking that meant accounting.
And we're leaving out cost of goods sold because we're being just real specific to the sales part of it. So, because of course you should debit cost of goods sold, credit inventory, and all that side of it, but we're not going to worry about that. So, all right. So just remember, it's really only 7 journal entries, and it's your job just to recognize which of the 7 it is, because you know the adjusting journal entry. If you've drilled on the 7 and you've memorized them, you should be in a good space. Okay, so now I want to look at the bank reconciliation question 5. And I have to do this for Justin. I promised him I would. Does anybody else have other questions that should take priority? Because I can record that bank recon answer at the end.
I guess one quick one on the adjustments on this problem on let's see, the snow removal services one. The answer key had that as snow removal expense.
What would you call it?
I called it wages expense, but I guess you're not normally paying a wage to the snow removal people, so that's
I thought
probably
it was
not correct.
utilities expense.
Well, utilities is closer. Can you think of something else? I would not have guessed snow removal expense unless maybe they're in North Dakota and that's a significant lot. You use expense accounts for things that are regular expenses. If you have a one-off, you put it under a more general category because it's just data. You don't need all that extra tracking. Although now, I guess maybe people want that, but I would have just called it maintenance expense.
Okay.
So, and that would have been fine. But if you want to be specific, you can call it snow removal expense.
Okay.
That seemed kind of hilarious to me, but yeah. I didn't write this test. I've contributed to it, but I didn't have the final. I didn't write this problem, but I like it. I like how it's laid out and it kind of gets your brain kind of thinking of things a little bit differently. So, all right. Now, what is that? Why did I give you that answer down there?
I think that got like copied from the answer key.
Oh my goodness. Well, I'm sure that was very helpful. So
It saved a little bit of time.
So, oh, it's going out. It's not going to be there next time. All right. But you get the idea. Okay. All right, so anything else? Basically, we've got, you need to know the income statement, retained earnings, and the balance sheet. And it's going to be the big classified balance sheet. So really study the Franklin and study the solution. Then you need to know basic journal entries, adjusting journal entries, closing journal entries, perpetual journal entries, periodic journal entries, and then the bank recon and the bank recon adjusting journal entries. Okay. So we're not gonna do theory on this test. There's no essays on this test. It's just gonna be problems. Okay. So let me bring up the let's just bring this up, the Fagan problem.
Already correcting journal entries in there too.
I think so. Let's take a look. But let's do it from scratch. Let's see, what did I do here? A, B, C, D, B. Yes, A, B, C, D, E. Okay. Hold on. I have the full solution, but I kind of like to walk through it. Okay. All right. Can you guys see Excel?
Yep.
Yes.
Okay. So if you look at the Fagan problem, I don't know how you pronounce that, but looks like Fagan. The cash balance per books for Fagan Company on October 31st is $8,736.01. So that's what we start with. So I'm going to kind of lay this side by side so we can kind of see them, hopefully. Can you see both of these?
Yep.
Okay. So we've got the cash balance. So when we say books, I really want you guys to think in terms of the books means the cash T account. Okay. That's what the books are all about. So, oh, I didn't want that. Take that back. All right. So it's giving us that. And dates are super important in the bank recon. Okay. And the question, if we go down to the bottom and say, what is the question? Prepare a bank recon at October 31st. Okay. That's important too. So then we can kind of measure our data accordingly. So we have here the following checks and receipts were recorded for them. Oh, what did I just do? Sorry. Were recorded for the month of October. So the T account, which is currently balanced at 8,736.01, that T account includes all of these transactions up here. The company wrote 1, 2, 3, 4, 5, 6, 7, 8, 9 checks, and the company recorded 4 cash receipts. So the checks would have been, whatever, debit to accounts payable, credit to cash. The receipts would have been debit to cash. Cash goes up with receipts, credit to accounts receivable. Okay, we'll just make it really simple. Okay. They say our balance is 8,736.1. Then they receive the bank statement for October. And how do you find the bank statement balance? Because it wasn't given to you up here.
Oh. It says balance this statement all the way to the right on the bank statement 1195. I think that's it.
Yeah, okay, that's perfect, Austin. And then down here, it also gives this column I'm not crazy about. It's like whenever you do a transaction, it updates your balances. It just makes the statement a little busy. But anyway, at the end, this is the final balance, and it's up here as well. So that's what we use on the bank side. That's the bank statement. The bank says, this is what cleared the bank. This is the books compared to the company's cash account. Okay, so now it's really very simple. We look at the bank statement and we say, is there anything on the bank statement that would not have been recorded on the books? And it's really all of these checks, we've already recorded them. And all of these receipts we've already recorded. So it's only these right here, NSF, SC, and 2100 CM, okay? Now it's real important that you keep in your head, are those things, were they added to the bank account or were they subtracted from the bank account? So see where it says checks and other debits. Remember, checks are subtracted, companies paying a bill. So NSF is under that column, so it was a subtraction. Service charge is under that column, so it's a subtraction. And credit memo is under the deposits column, so it's an add, okay? So we can just lift this stuff off of here for the books. So this is, sorry, I said we were going to adjust the bank, but let's start with the books. They're easier. So we've got a credit memo of 2100, and we're going to add that. And what is the credit memo? They have to give you more information. So down here, they say the credit memo is for the collection of a note receivable of 2040 plus interest of 60. Okay. So let's write it up. Note receivable. Now I can write it as 2100 or I can write it as 2 transactions. I'm going to write it as 2 transactions. So if my bank account went up with interest, it has to be interest revenue. If it goes down with interest, it's interest expense. So we're just going to call it that. Okay. Does that make sense to you guys? Any?
Yeah.
Okay.
Yep.
All right. So we've got this note receivable. We've got the 60. So that's taken into account the 2100. Now we've got 2 subtractions. So we've got an NSF check. We're going to subtract it. And we've got service, a bank service charge. And we're going to subtract that, okay? And I think that's all our adjustments. So then we're going to total this up.
I think there's a check.
Oh, we
here.
have another thing, but I'm going to total it up anyway, and then we'll go from there. So right now my running total is this. And you're right, Cameron, it's not correct. So that's where we are right now. So now let's move over to the bank side. And we haven't processed all this information yet either. Okay. All right. So on the bank side, what we do is we go and look at what the company recorded and we check it off. So the company recorded check 17, and there it is, check 17. Check 18, and you could miss this. Happily, there's a note down below, but check 18, the company recorded it as $780, but the bank recorded it as 708. So we know we have an error here. It's either a bank error or a company error, but let's move on. Check 19, 157, check 20. Check 20 did not clear the bank, okay? So what does that mean? That means that it's still outstanding. So the term outstanding means it hasn't cleared the bank, even though the company has already deducted it. So let's leave some room here. We know we have 2 types of transactions here: deposits in transit and outstanding checks. So we know we have check 20 is still outstanding, and that's going to be for that $587.50. Now, that has to be subtracted from the bank account. So I'm going to make a negative there, because what it's saying is the company's already subtracted it. They've written the check. They've mailed it to a vendor or a supplier, but there's some timing issue and it hasn't cleared the bank yet. So it's an adjustment. It's still outstanding. Okay. Check 21, good. Check 22, not good. I think it's missing 22. Oh no, it's over here. And be careful, make sure you look at all the checks. Check 23 has not cleared, so let's do that. And that's another subtraction. Okay. Check 24, 921 is right there. Check 25, 246 is right there. So these are the only two outstanding checks. Now we're going to move over to the deposits. So the bank recorded 1, 2, 3, 4 deposits. And it doesn't really explain this 54, 84, 38. So we're going to just make an assumption that that was from the previous month and that it's already recorded by the company. So we'll start with the current one, 843, check, 941, check, 808, check, 967, not there. So deposits in transit are going to be 967. Okay. All right, so we're going to come here and say that looks like all the adjustments. Well, you can tell we are not in balance. Okay. So let's keep, but we knew we had a problem with check 18. And they give you this information. Check 18 was correctly written for 708 for a payment on account. So in other words, company bought something for 708. They debited supplies expense, credited accounts payable. And then when the company recorded the check, maybe it was a manual process or maybe a key punch error, they recorded the check as 780, but the real check should be 708. So this is going to be a correction to the company's books. The bank did it correctly. It was correctly written for 708, and that's how the bank recorded it. Okay. So we need to think about these error corrections. Okay. So I want you to think about how you have, just really want you to visualize this. If I can do this, we have vendor, also known as a supplier. We have company, that's whose books we're doing. And we have customer. Okay. All right. When we sell something to the customer, that's accounts receivable. When we buy something from a supplier, also called a vendor, that's accounts payable. Okay. So the company has this cash account. I should get a stylus and I should get a touch screen. I think that would be a good idea. All right. The company has this cash account. And they recorded that check. All right. Let's do this. They recorded that check incorrectly. Instead of debiting accounts payable 708, 708.62, they debited accounts payable 780.62, and they credited cash 780.62. That was an error. How do they fix this error? They should fix it so that after they've fixed it, let's assume that's one transaction just to make things easy. After they're done fixing it, it should be 708.62. So tell me what they have to do to cash to make it go from 780 to 708. The difference is $72. Do we need a debit to fix it or a credit to fix it?
Credit.
Or do we need an increase to cash or a decrease to?
Oh, a decrease.
So we would have reduced cash $780. We should have reduced cash only 708. So we deducted too much from cash.
Oh, okay. Then I'm wrong.
So we need we need to increase cash by $72 and also accounts payable. Okay. So we have that error. And we're going to add that back. Okay. So I will tell you the errors are tricky. You have to really track them through and make, because if it's accounts payable, if it's accounts receivable, you have to know which way the numbers are going. So let's review that one more time. The company wrote the check correctly at 708, but when they posted it to the T account, they posted it as 780. So in order to fix that, they have to debit, and it would have been a credit because you debit accounts payable, credit cash when you pay bills. So in order to fix it, they have to increase cash, which we do with a debit. Okay, and now you can see I'm in balance. Okay. All right, so yay, we're happy. Now, the only correcting entries we do are these. Anything that you did on the, oops, anything you do on the books side. We don't make correcting journal entries for deposits in transit or outstanding checks because there's no correction to be made. They're already recorded on the books. So these 5 items were not recorded on the books, or in the case of an error, the error has to be fixed. Okay, so super easy way to do this. If it's an increase to cash to 20, 40, 60, just start, or 72, just start building your journal entries. Okay, I'm gonna go over here and grab this guy. And let's do them in order. Mine were out of order, so I'm gonna copy. So the way I'm gonna do it for you guys is there's gonna be 5 journal entries. And one half. So, okay, remember I started out and I said adjusting journal entries have no cash in them. It's got to have one balance sheet account, one income statement account, but that's it. For the bank recon, the correcting journal entries always have cash on one side or the other. So in this case, we're increasing cash. And in these 2 journal entries we're going to build, we're decreasing cash. So if we're increasing cash here, that's going to be a debit. And then we're going to figure out what our credit is. You guys are going to tell me. On this one, same deal. It's going to be cash, debit 60. And I'm not putting the words debit and credit on top. Maybe I should do that. Okay. So I'm going to build half of these journal entries, and then I'm going to take this last error, and it's an increase to cash. So that's another debit of 72. Then I'm going to take these subtractions, and now cash is going to be credited for 230, and cash is going to be credited for 35. Okay, you get that far and you are halfway there. So it's just a question of, is it a debit to cash, or a credit to cash? Okay, all right. So, and obviously the other half of this journal entry is the same amount, right? So all right, so this was a collection of, and the problem tells you this was a collection of a note receivable. The credit memo is for the collection of a note receivable. Read the problem. It might say accounts receivable, so just be mindful. You want to get it right. So it's telling you what the offsetting account is, note receivable. Okay. And that one's, oops, that one's done. In this case, what is the 60?
Interest revenue.
It is. And then you've got 3 more to go. So let's do the easy ones first. Let's do the 35. That's service charge. What account is that you guys have used?
Bank
Service
charge
charge
expense.
expense.
Service charge
Right.
expense, bank charge expense, either one of those is fine. But be sure you get the word expense in there. Okay. All right. Now 230, let's go back and read this. The NSF check was from S. Long, a customer, in settlement of an accounts receivable. Okay. NSF checks are checks that the company already recorded. They debited cash, credited accounts receivable. It was also recorded by the bank. And then the way banking works is the bank goes through the wires and pulls the money from the other bank account. And at that point, the other bank, the customer's bank, says, we don't have enough money in that customer's account. And so everything gets reversed, and we call that a bounce check because it goes to the bank, but it's bounced back. And then the bank says to the company, we won't deposit this check because the customer didn't have enough money. So everything gets reversed. So that 230 goes back on accounts receivable. And the people in the accounting department have to call the customer up and say, hey, buddy, you don't have any money in your account. Please send us a cashier's check. Okay. Now for this error, you have to pay attention and read, was it a customer check error or was it a company check error? Okay. So let's go back and read, because if it's a company check error, it's going to be against accounts payable. If it's a customer check error, it's going to be against accounts receivable. Okay. All right. So let's read. Check number 18 was written in payment on account. So we use the word payment. It wasn't a cash receipt, it was a payment. So that means it's going to be accounts payable. Okay. All right. And I think, did they give you all those solutions? Yeah, they did. So they said cash accounts payable, note receivable, bank charge expense, and accounts receivable. Now they, again, I don't know how picky you guys are. They like to label accounts receivable and then add the customer's name. I don't do that. It's a little, I think that's a little confusing because it's just the accounts receivable. So you will keep records by customer, but you don't need the journal entry to have that in it. You can put it in the description. But remember, we don't do descriptions on tests. So, all right. Okay, anything else on that problem? That's a good problem because it kind of forces you to understand bank recon, but also kind of review that company, vendor, customer, all of that. And remember, vendor's just another word for supplier. Okay. All right. Anything else on the exam you wanted to go over? So let's see. There's a couple of short cash flow questions. You know, just go back. There's a lot of journal entries, so just make sure you know all your journal entries, all of that. So. All right, well, I will see you guys tomorrow then, unless you have something else to say. Get out there and go outside. That's what I would say.
Yeah.
So I am singing tonight in the faculty choir, so that'll be what I do.
Oh,
So.
wow. That's cool.
Well, I can't even call it a choir. There's 6 of us, so a little small group. But we get to sing with the big choir, which is the student choir. So that's going to be real fun. So,
Oh, that is pretty cool.
so if it is cool, and it's the last time we're singing, so that'll be good. That'll be nice. All right. Anything else?
I think I'm good.
I think I'm good too.
All right, you guys, I'm glad you're here, and see you tomorrow at 2:30 in C208.
Sounds good. Thank you so much for
All right.
everything. That was really
Thank
helpful.
you.
I'm glad. All right.
Yeah,
Take care,
thank you.
guys.
See you
Bye-bye.
tomorrow.
See you
See you
later.
tomorrow.
Bye.
Bye-bye. Guess I should stop my recording.